Yo, what is going on, guys? It is Johnny back with another video, and in today's video we're just going to be going over standard deviation projections, SD projections. A lot of you guys might have seen this concept on Twitter. It's a very useful concept, actually. It's nothing complicated. It's actually super simple. And you guys know me, man. You guys know me. I love simplifying things. I love making things not super complicated for you guys to understand. It's actually very simple, and it's actually a very helpful and useful thing to add to your trading arsenal because it can give you extra confluence on where price may go, may or may not go. Obviously, you'll see right now, price usually does head to these standard deviation projections, but hopefully you guys enjoy the video. If you guys do, please leave me a like, comment, and sub. Let me know what you guys want to see next. I'm always trying to ask you guys, in my community, my Discord community, or my Telegram, or even Twitter, like what ideas do you guys have for a YouTube video? What do you guys want to see? But let me know in the comments, and let's get into the video. All right, so now what is standard deviation? What is this? Why do we need it? Why do we use it? Why do we care? Now, standard deviation is going to give you projections on where price may likely want to go, right? Especially if you have clear buy side targets or sell side targets. Now, what you want to look for to anchor off your Fibonacci to find those projections is a basic manipulation move. Now, what is a manipulation move? It's basically just a liquidity sweep, bro. If anybody else tells you different, it's what it is, bro. It's just a liquidity sweep. Right here, we have a liquidity sweep right there. You have your short-term high, and then you have that swing low right here that forms. So in these scenarios, you just want to anchor your fib from the low to this short-term high. And then it's basically going to give you projections, right? It's going to give you the -1. And what we really want to pay attention to here is the -2 and -2.5. Now, when price gets to this level, this is very important. Pay attention. When price gets to this zone, right, you can consider this a zone between the -2 and -2.5. You can consider this a zone, basically, right? When price gets up into that -2 and -2.5 area, what price usually does, it doesn't have to do this all the time, and it doesn't get to where it needs to go all the time when it reaches this zone, is price will actually pull back to the equilibrium of the price leg that sent it up to the -2 and -2.5. For example, right here, so it would be this price leg, right? This swing low right here to this swing high. And guess what? Price perfectly taps equilibrium right there. So it doesn't need to do this all the time, but it usually does. Okay, it's something to look out for whenever you hit the -2. It's a good take profit zone. Also, to go in confluence with the -2 and -2.5 zone, you also have what right here? Buy side liquidity, right? Boom. Right here. So it lines up perfectly right there, the buy side with this zone right here, the -2 and -2.5. And then usually, we retrace to the equilibrium of the price leg that sent us up there. Very simple stuff, guys. It's not super complicated. Now, can you anchor your Fibonacci from this high to this low? Of course you can. This is a manipulation move, right? We take out sell side right here. We take out sell side right there on the lower time frames, but you can anchor it on the 1 hour, right? For this example here, you can anchor it here if you'd like, right? Boom. Now, obviously, we have the -2 and -2.5 zone, and look at that. Price sweeps the buy side, and we're using the projections from last Friday, and there you go. Boom. -2 hit, reverses all the way back down, right? It's pretty cool to see these projections play out. And usually what I do, I don't really like carry over the projections from last week to the current week. You can if you want. Like this example worked out beautifully, right? But I usually don't do that. I kind of just focus on the weekly, the same week profile. I don't really carry over the projections from last week or anything like that. And also, you could do it on the bearish side as well, right? So right here, for example, you have your manipulation move, right? Sweep a high. You anchor from the high to the low right here, the swing low. And obviously, we have the -2 and -2.5 down here. And look, guys, a lot of the times, this is just an extra confluence to tell you where price may want to go. Don't solely just use this for trade ideas. Obviously, it's just, again, just the confluence on where price might want to go. Don't use this solely by itself. This is just like an extra thing to add to your model. It works very well if you're using market maker buy and sell models. It's something that, people that use that model, they use this a lot, right? Now, for example, here on this week right here, right, which was last week. Now, where you would anchor your Fibonacci would be down here, right? You can anchor it up here, but this isn't really a very clean. I mean, it is a manipulation move, right? We sweep the high, but like you don't have a good swing low up here. There was one on ES, which I'm going to show you here in a little bit, because sometimes, you know, the correlated assets, you might have one have like a way cleaner manipulation move than the other, and that's the one you want to anchor the fib on. But for this, you know, example right here really quick, I want to show you guys right here, right? We have the sell side right here that obviously got cleared early on in the week, and then we have this sell side there, got cleared, and this sell side right here. Now, where's your manipulation move, right? Your manipulation move comes in from right here, right? This swing high right here, 3 candle formation, 1, 2, 3. This becomes your swing high, and then this becomes your swing low. This is where you want to anchor your Fibonacci, right? From the low to the high. Reason being is because this short-term swing high sent price to a new low, and we took out liquidity there. It doesn't need to take it out here. It just needs to take out some sort of liquidity. This is a manipulation move, right? It's basically what it is. So you want to anchor your fib from the low to the high, and then this is where price can go for the rest of the week. And obviously, you know, it pushes up there. And again, it doesn't always need to retrace the equilibrium, like right here, right? When price is just gunning all day, it's probably not going to reach equilibrium. It got close to it, but it doesn't always need to. It's just like a potential target for price to retrace into after it hits this -2 and -2.5 zone. And obviously we came up and hit the -3, and that other projection over here hit the -2. And then just, you know, in confluence with this, we also had buy side at all-time highs. So cleared that, and then we ran to the downside. Now, you could use this on lower time frames, right? You just look for a little manipulation move. Again, right here, there'd be another one right here, right? Swing high to the swing low, clears out that low right there, anchor it right there, boom. And then, you know, in perfect confluence with this buy side right here. So if you were trading London session, this is where you would want to potentially take your position to. If you were in longs right here, you'd want to take it up here. Also in confluence with this buy side, these relative equal highs right here. Gets hit, perfect time to take profit, because you never know, right? This is the right here in this candle. This is where New York starts to open up. So good idea to take profit if you got in somewhere in this price leg right here. So that's pretty much standard deviation. You just look for a liquidity sweep. You look for that short-term swing high or low, whatever the situation is. You anchor your Fibonacci, and then you'll get those projections, and you know, that gives you an idea on where price may want to go. Now, for example, here on ES, right, how I told you guys in that same week, we didn't really have a clean manipulation move on NASDAQ, but we do here on ES, right, here on Monday. Nice clear swing low, nice clear swing high, so you guys could understand that right there. Swing high to swing low, and guess what? Look where price goes, right? -2 and -2.5. So what you guys could do here is, you know, anchor the fib right here. This is where equilibrium, you know, this is where the equilibrium comes into play, right? This is where price can potentially go up to for the next day after price hits the -2 and -2.5, and obviously it gets hit. And I actually called this out before even all this happened in my free Telegram. So if you guys want to join my free Telegram, the link will be in the description below. But I pretty much gave them a weekly outlook, and you know, I always do my weekly outlooks during Tuesday evenings because I like Tuesday's data. From there on out, I could probably most likely tell you where, you know, the rest of the week is going to go. And, you know, honestly, I did a very good job in doing this. It wasn't hindsight. I did it way before the fact, you know, before all this happened, and we obviously pushed up. And then again, I called out this massive move before it happened. So if you guys want the sauce, join the free Telegram or even the free Discord, where I'm way more active in there. Or I mean, the paid Discord. There's no free Discord. But yeah, -2 and -2.5 got hit right here. Beautiful reaction, and then we pushed up, and then obviously, you know, pushed up again. And here you could use the manipulation move right here as well, right? From this swing low to the swing high. And look, -2, -2.5 gets hit perfectly. And then guess what? We retrace all the way back down to these equal lows right here, the sell side there. And then we just melt right after we hit this zone. So good stuff right here, guys. Definitely add this to your things of confluence and trading. It really helps and tells you and lets you know on where price may want to go. You just look for a liquidity sweep, look for that manipulation move. Price is fractal, bro. This works on any single time frame. It works on 1 minute, 15 second, 5 minute, 15 minute. Just look for that manipulation move, right? Look for that swing low that gets swept or the swing high that gets swept, and then see if you get displacement below, and then you have a nice clear manipulation move. I mean, yeah, I can go on and on about this. There's a manipulation move right here, right? The swing high clears out all these lows. So this is your manipulation move. You anchor your fib from this low to this high. You get the -2 and -2.5. Obviously, the rest of the week goes up to there in confluence with this buy side. It's very, very simple, guys. I'm going to see if I can find a bearish one really quick for you. Right here as well, right? Boom, gets hit on Monday. You could anchor your fib from this high to this low. And guess what? -2, -2.5, the 3, and almost the 4 even gets hit. And then we start reversing. So this just gives you projections on where price may want to go. So definitely add this to your trading arsenal so you can find out where price may want to go next. So hope you guys enjoyed the video. Hope I broke it down super simple for you guys. Nothing complicated, super easy. Gave you guys the settings in the beginning, but if you guys enjoyed this video, please leave me a like, sub, and let me know what you guys want to see next. Let me know if you guys like this explanation. It was very, very simple, I feel like. But yeah, hope you guys enjoyed the video. See you guys in the next one. Peace.